In Australia, real estate often comprise a sizable portion of the portfolio of single-family offices or SFOs. Our money expert, Lionel Lee, addressed this topic at the University of Melbourne and Fireside Chat with Professor Piyush Tiwari. If you would like to understand more about single-family offices or SFOs, we have a separate video on this topic, with insights from Lionel, who is associated with several SFOs in the US, Europe and Asia. For this video, Lionel suggests we start with understanding what real estate Australian SFOs invest in, and how much of their portfolios are in property. Most Australian SFOs like Paul Little's Little Group, Bob L's Leader Holdings, and Ralph Sarich's Cape Bouvard Investments have direct ownership of residences, office buildings, retail spaces, and mixed-use developments. Others invest in real estate investment trusts and development projects. Some Australian SFOs invest in niche areas like logistics and warehousing spaces, agricultural land, healthcare facilities, student housing, and aged care facilities. For instance, the family offices of Gina Reinhardt and Andrew Forrest bought pastoral properties in Northern Australia over the past 5 years. Findings from late 2020 to early 2021 survey by KPMG and the Table Club showed that real estate constitutes about 24% of Australian SFOs' portfolios. The 2023 Asia Pacific Family Office report from Campton Wealth shows an average of 15%. A report by Prekein and the Australian Investment Council revealed that Australia SFOs are increasing their allocation to real estate. Their real estate assets under management grew by 28% in 6 months from December 2022 to June 2023 to a total of $55.7 billion Australian dollars. Why is there such a high allocation and active investment in real estate among Australian SFOs? Lionel shares 7 reasons. The first reason is real estate has historically been a boon for ultra-wealthy Aussie families. According to Wealth Insight, 21% of families who have established single-family offices acquired their wealth in real estate. The second reason is real estate serves as an important portfolio stabilizer for Australian SFOs, and offers some insurance against the negative effects of inflation as well as volatility. The average inflation rate recorded by the Australian Bureau of Statistics was 2.54% from 1992 to 2022. In contrast, the dwelling values nationally rose by 5.4% on average over the same 20-year period. According to Canstar, Australian stocks delivered an average return of 9.8% from 1992 to 2022, but they bear the full force of market volatility. In 2008, the Australian market lost 41.3% of its value for the year. And again in March 2020, where it lost almost $140 billion Australian dollars due to the economic fallout from COVID-19 and an oil price war. This inflation and macroeconomic volatility hedge lends support to the third reason, and that is real estate is a tangible asset that delivers stable returns over time. AMP Investment reports that returns from Australian unlisted commercial property have averaged 9% per annum over the last 10 and 20 years to May 2023. According to Aussie Home Loans, the capital gains from 1993 to 2018 equates to an annual growth rate of 6.8% for houses and 5.9% for units. The consistent returns from Aussie real estate supplements the fourth reason for Australian SFOs' high allocations. And that is their objective of long-term wealth preservation. Despite the down years, cash-flowing real estate generates consistent income and capital appreciation over the long term. Few asset classes can play this important role in preserving family wealth across generations for Australian SFOs. Wealth preservation and intergenerational wealth transfer go hand in hand. The fifth reason is real estate is easily transferable to succeeding generations, especially through the use of trusts. The sixth reason is the tax advantages associated with real estate, including depreciation benefits and opportunities in qualified opportunity zones that allow for deferred capital gains taxes. Commercial real estate provides several tax perks including capital gains tax discounts, land tax exemptions, negative gearing and GST credits. This tax efficiency is a significant factor driving Australian SFOs' real estate investment decisions. The seventh reason is real estate is a key piece of Australia's wealth and economic backbone. More than 2/3 of Australia's household wealth is invested in residential property. In 2022 to 2023 alone, the Australian Taxation Office recorded foreign investment of $4.9 billion Australian dollars into real estate. The industry accounts for 1 in 4 jobs indirectly and represents around 13% of Australia's gross domestic product, according to the Real Estate Institute of Australia. Combining these 7 reasons with predictions of average 5.1% per year house price increase from 2024 to 2030, Australian SFOs will likely choose to remain significantly invested in this asset class for the foreseeable future. We hope you enjoyed the video. Please like, subscribe and share it with your friends and family to better their personal finance knowledge.